All right, welcome back to Rip Roaring Realtors. It is our acoustic panels are falling down. We're back. Welcome to November. Allison has a little different look to her today, but we have James Ream of Home Sale Mortgage here today.
Hello.
Jim. Say hi.
Hello, everyone. Happy to be here.
Give him your DL, background, info, likes, dislikes.
Well, I've been...
Dating range.
Yeah, I've been with Home Sale Mortgage since 2019, been in the mortgage business since 2017, so seen a lot of different things, done a lot of different loan programs and things like that over my time, but I really enjoy it. Big sports fan, all that stuff, so go Birds.
Go Birds.
Whatever you're into.
3-1 here.
Yeah.
Yeah, I'm outnumbered. Sports preferences. So, today's topics, we're in November. We're approaching Christmas because...
Well, but hold on. Thanksgiving comes first, so...
Okay, but yes, it
Pump the
does.
brakes.
We're not
Next
forgetting
week.
Thanksgiving, but
Thanksgiving's the best. I mean, you can't forget that.
We're going to gorge and go into food comas,
yeah.
and I'm going to eat single-handedly 3 pounds of turkey.
Yep.
and then take a nap.
Yeah.
For a day.
Yeah. What's everybody do for Thanksgiving?
I go to my mother-in-law's and my whole family, we go there. This year I am bringing mulled wine with apple cider and wine that my husband and I got when we were in the Finger Lakes. It was delicious.
That sounds great.
I got
know.
mulled wine when I was there, too.
Did you?
Honestly.
So good.
You're very far away from your mic.
Oh.
Sit up and keep proper. Burnell, tell us about your escapades on Thanksgiving and the night before.
Night before, anything could happen. Day of, it's hanging out with the family, relaxing, eating a lot, way too much. We always hang out all day for lunch, and then we have like cold turkey for dinner.
Yeah.
And like play games.
Cold
and,
turkey for dinner.
you know, yeah, it's a good time.
Yeah.
Yep.
Jim and I, we go to a day of debauchery with our friends. We go to the refugee Thanksgiving.
Yep.
Mind you, I have family. I'm invited to
Same.
other events. I just like my little refugee thing. I drive 8 minutes down the road. It's food and a bunch of idiots, and we have a good time.
Watch a lot of football.
Watch a lot of football
Yep.
and slip into a food coma. Don't
And then wake
show
up
the
and eat
picture.
more.
Don't show the picture.
Yeah. Oh, that was a bad picture.
It was not flattering. It was 3 pounds of turkey, and the night before is bad.
I need to see the picture. So that kind of brings us into holidays are coming. During the holidays, what do you usually advise to your clients about? I totally forgot what I was just going to say.
To decorate or not to decorate?
Yeah, we talked about that last time, didn't
We
we?
talked about
We
that
did.
last time.
Then
Yeah.
what was your point there?
I forgot.
Put at least 30 inflatables
So-
up in your front yard.
Selling your home over the holidays.
Selling your home over the holidays
There
was
you
my
go.
point. Thank you, Burnell.
Oh, we have like a little board there. We can actually put a paper with our IDs
Oh,
on
that's
it.
a good idea. We should do that.
We're still figuring out, guys.
Yes. Okay. Selling your home during the holidays. Is it a good idea to sell your home during the holiday season?
I mean,
Yay or nay?
People always have to move for various reasons. So I thought the table was going to do better.
We constructed this table very well.
Yeah, I don't buy that.
It's got like 4 screws in it I found sitting around.
When listing your home over the holidays, I always say to do coming soon over the holidays
Yeah.
because then people are traveling, but people who are looking can see that it's coming. And then when they're done traveling, they get back in town, then they can go take a look at it.
Yeah.
So you get better foot traffic, I think, just after the holidays.
Yep.
And, everyone gets together over Thanksgiving and gets to talk about, oh, I just listed my home. I just put it on the market. Or I just saw this home come on the market that I'm really interested in. And I'm going to go look at it. It comes live on, the Monday after or Thursday after. So
I actually just advise sellers to do that.
that's exactly what I'm doing.
We're doing a coming soon over Thanksgiving, and then
Yep.
the Monday after Thanksgiving, we're going live.
Photos
I'm
on
going
Tuesday.
live that Saturday.
Do you?
Day after Black Friday.
Saturday.
Yeah. Yeah.
So let me ask you guys this. Obviously, you guys are the real estate professionals here. What about, homes being cozy and, put together for the holidays and people going through that, maybe not in this market where it's, a little more competitive. But in a neutral market, for instance, what are your thoughts on, people have the house decorated for Christmas, we'll say, do you think that impacts anything when people are walking through?
Yeah, I just advised one of my sellers to decorate for Christmas, and we're doing photos. I forget which day, but coming up here shortly, and going to go live coming soon, like the first week of December. And I thought, hey, it's previously I always advised against it because you're going to have Christmas photos in January, and no one wants that.
Right.
Now it's a more the market is very fast paced, so I feel like it's a good time to do that kind of thing because you get 15 days on the market, roughly, average, probably less than that in most cases.
National average is like 21 or 23, but
Yeah, so it's
we are very hyper local here in Lancaster
coming
County.
up.
hyper. We love that word, Jimmy.
Yeah.
Hyper local.
Hyper local.
But I think it's going to be good because the photos, the marketing is going to be great. It'll be time sensitive, but it'll be gone by the time that's passed. So,
Sure. Okay.
But I do
That's where I'm at.
think tastefully decorated.
Yes.
Yes.
So we don't want 30 inflatables
Yeah, of
outside
course.
blocking
Four
the view
Christmas
of your,
trees.
the stone facade. Like we don't want,
My mom always said everything in moderation.
exactly,
So,
exactly. So I think that we definitely have to kind of watch our sellers there and maybe
Yeah.
take down a few Santas
Sure.
sometimes.
Do you think we could deal with like 4 stockings instead of like 64 you have hanging across your
Yeah.
mantle?
Yeah.
Thank you.
Yeah.
This is one for like every one of our extended family. We don't know.
Yeah.
Yeah.
They want to be
Because
able to see what they're potentially buying.
when you decorate for that, I think the issue you run into is like some people go overboard. Then
Yes.
you're cramping your space and you
Yes.
can't really get the feel
Yeah.
for a room. And you walk into like, we decided to get the 7-foot wide for a tree this year. Oh, well, that takes up half of your living
Yeah,
room.
the living room is
Thank
12
you.
feet wide, so
Right.
there's no room to walk.
Oh, where do we put the furniture? Oh, well, we put a stool there in the corner during Christmas so somebody can sit there, but only one person.
But truly, though, because the buyer needs to be able to envision themselves in the space. And if there's something huge obstructing
Sure.
their view, it's not going to go so well.
Yeah, agreed.
Yeah.
So we're running the fall. James, what are you seeing mortgage-wise? Are you consistently busy through this year? I feel like this year's a little different for me. I feel like just like everything's been nonstop since January. What are you feeling?
I mean, for me personally, this year has been much better than last year.
Yeah, same.
And it was kind of weird to start the year. I was much busier than I've been in the past few years. I don't know if I was just doing things differently the end of last year, but it's been busy. Now there's been some ebbs and flows. Like November is I'm having a really good month, but then October wasn't as great. So it's like kind of up and down. But
Yeah, that's what I saw too. Busy August and September. November kind of, or October was like, and then November it's like
yeah,
going again.
yep.
We didn't really have
busy.
this summer lull like I expected
No.
I felt like I did in
I didn't.
June.
Maybe
My
I just
June was
forgot.
not that great. Maybe it was me.
Yeah.
It was you.
to. Always you.
It's me.
Bernard.
I'm the problem. It's me.
Stay tuned for karaoke afterwards. It gets
Never.
worse.
Never. I won't do it.
Yes, you will.
Only once with Jenna in Boston.
That's the end of that story.
Oh, we sang karaoke in Omaha too.
You did.
I didn't. I went to bed. Allison and I went to bed.
Oh, true. No, it was martini night.
Yeah. Yeah.
It was just the two of us out that time, right? Or was
Tally?
Brittany and Tally and
Yeah.
there was
Some of the peoples were there.
Jenna and Allison left. But
Yeah.
the
We
rest
did.
of us were still out.
We did. But that's when we had that awesome Uber ride with that guy we talked about last time.
Yeah.
Oh
With
yeah,
the
yeah.
Bitcoin.
The car he bought low.
Yeah. Yeah. Yes, the buy low guy.
Well, Bitcoin just hit 99,000 yesterday. In
Wonder
case
if
anybody's
he-
aware.
Oh.
Yeah, I wonder if he bought the Tesla.
Wait, I wonder what the number was that he told us. I can't remember. Allison knows.
No,
Yeah,
she didn't.
but it
She
was-
said she forgot it.
It was a low number when you were all supposed to buy in.
Yes.
And Allison
Buy
said
low,
it never
sell
hit.
Oh, it never hit the low, and that
Yeah.
was yes.
But
Yes.
it didn't hit the low he was talking about, and it's probably going to go above the high
This
he was
dude
talking
was
about.
driving like a 1991 Accord for Uber.
But he knew what he was talking about. He had all these
Or
charts.
he pretended.
Yeah.
Or he pretended.
I don't know. He had all these charts all over his car. His license
He
plate
was-
literally was buy low. BUYLOW.
He paid
And we
more
were
for
like,
his vanity license plate than he did for his car.
I want a vanity license plate. Is that dumb? Is that a
What's
waste
yours
of money?
gonna say? Hi-ho?
No. Bye,
Off to
hi.
work I go. Come on, Jim.
can't take you anywhere.
I-O. That's what it'll be.
All right, Jim, rates today. What are we looking at today?
So depends on the program,
Yes.
obviously. But
Give us a rundown.
7, either side of 7.
6.5 to 7.5.
Yeah, sure. It's a lot of volatility. So when it comes to mortgage rates, it was, we were on the up and up for a while, and then things started coming back. And then I feel like it's been up and down, especially the last couple months.
Well, we hit that 5.5 like for a while, right? We were like in
We got down in
For like 2 days.
Yeah, it was a
And then
very,
every
very
day
short
it
Do you
time.
ticked
think
up
that
Yep.
was like a
after.
government feedback to try to support someone during the election?
Yes.
Or what do you think caused that, Matt? Like, because Jay Powell never really changed his opinion on things.
No, some of the inflation reports were a little bit better than anticipated. Some of the job reports, those are the
But
biggest.
then they came back and corrected them, right?
Yeah.
Well, that's the
They
problem.
did.
They
That's-
always the
that's
next
why the
month
rates came
revise things from the
Yes.
previous month.
Yeah.
I feel like they have one job with these reports, and it's to
Right.
get them right, and they're never correct. So there was an inflation report. I want to say it was Consumer Price Index that came out last week or the week before, and they revised the previous month to higher, and that caused a ripple, not in a good way, with rates. But it's things change. I mean, throughout the day, week to week, and it's just staying on top of it. I subscribe to a service that I see what mortgage-backed securities are doing throughout the day, and
Insert
before
graph here.
yeah,
I
right.
have the graph.
Yes,
I'll get put it on here
yes.
so you can actually. That was a year trend.
So there was a 6 month and then a year.
Yeah.
I gave. So it's before I subscribed to the service. I mean, I don't know how I did my job as a mortgage loan officer because
really?
it was like flying blind because you had no idea kind of what was going on
When
with
to lock in.
right. So,
So tell us about how these mortgage-backed securities inversely or directly affect interest rates.
So the more that people are buying up mortgage-backed securities, the better it is for interest rates. There's
Explain
more
to the-
demand.
Mortgage-backed
So
security is
mortgage-backed securities are essentially, and if you ever have seen the movie The Big Short, which talks about
great
horrible time in real estate, they do a really, really good job of breaking that down and kind of explaining it. But essentially what mortgage-backed securities are, tons of loans packaged into one security, and then investors come and buy those, and then they make money off of those packages of loans. When we got into the 2008 market crash, it's because they were saying that they were better than they actually were, and then the default rates went up, and that's when we ran into that horrible time for the real estate market. One of which this hasn't really been the case recently. It's kind of bucked the trend, but the 10-year Treasury note, I'm getting a little technical here, but as that goes up, mortgage rates are getting worse. As that's coming down, mortgage rates are getting better. So not everybody that's out there can see what mortgage-backed securities are doing on a daily basis. But watching the 10-year Treasury yield, which every morning I wake up, I look to see what it did overnight and things like that. And, I follow that. Generally speaking, as that rises and falls, that's what rates will do. It hasn't.
But they would follow the regular trading hours, or are they a 24-hour thing?
So there's overnight trading with that as well.
But
so,
it's less volatile than the overnight.
Yeah. Sometimes. I mean, sometimes we wake up and it's like, what the heck happened overnight? And, things that happen around the world have an impact on that. The war in Ukraine right now, that's had an impact. I mean, going back to when that started, we really saw rates starting to get worse when Russia invaded. So it's not just what happens within our country. A lot of things, inflation in Europe and things like that has an impact.
The common misconception is, the Fed's lowered their rates, so now my interest rate's going to go down.
Correct. That is
Big
not
misconception.
Yes. So the Fed funds rate, which, that's the big thing, the headline, like, they cut rates by 0.5%.
Yep.
They don't have a direct impact on mortgage rates. Again, it's the mortgage-backed securities, buying and selling of those. However, it's almost like a trickle-down effect into other parts of the market that impacts things. So as the Fed was raising rates, it also coincided with inflation being super high. And that's when rates really, we saw from the historic lows to, it kept going up.
We were like 8%.
Oh, yeah.
Last year.
Which you would think.
The best of times.
Yeah. You
Terrible.
would think now, because inflation percentage, it's below 3, depending on the report you're looking at. You would think that rates would come back down, but they don't.
They're kind of propped up there.
Yeah, and I wonder why though, because I've seen different charts and different things saying that after an election, almost every single election, rates go up. No matter the outcome of the election.
Really?
I've seen that several times. Now it's been on social media, but I've seen it several times on several different outlets.
She read it on Entertainment Weekly.
So
Next to the new Shakira article.
So one of the we're kind of hoping for a nice little drop after the results of this election, but the investors out there are. Fearful is probably not the right word, but they're antsy about, what's coming as far as the economic policies and things like that. So that's why rates haven't seen a dip. Actually, right after the election, mortgage-backed securities dropped, so rates got worse. Was really hoping it would go the other way.
I know.
Have so many people I want to refinance, but
yes, we were really hoping.
So when we first started doing this, like we were making maybe it's just my reel, but we definitely talked about
We
definitely talked about we're predicting. All right.
We don't have a crystal ball.
We're full of shit.
Mine's in the shop, so it's been in the shop for a long time.
I don't care. But yeah. Like we were like, we're gonna see. We did see the 5, so we weren't necessarily wrong.
Yeah, for like 2 days.
Well, did it?
It was literally like
2 days.
We never said how long they'll be at that rate. So
True.
I mean, I might have dropped my crystal ball a few times, got some cracks.
I
Can't see
know.
everything.
Jimmy's is in the shop.
Yeah,
mine's a little. It's a little foggy. I can't always see into it.
Okay. So what do these rates? They're high. They're still high. How does this impact first-time home buyers and buyers in general?
Well, I mean, it has a big impact on buying power.
Yeah.
I mean, that's the biggest thing. There's some people that I'm working with that not so much now, but in the last couple of years, where maybe it was 2 years ago we started the process. Their rate at that time might have been 3%. And then they come back out of the woodwork. They're ready to start going again. Their lease is coming up on and it's like, ooh, that, I
it doubled.
cringe. Yeah, I cringe when I go into that file and I'm like, ooh, they were at 3.5 before, and now it's 7. We were touching the 8s for a minute. So, those conversations are a lot easier now when the rates shot up. I mean, every day it was explaining, well, no, rates are 3%. My neighbor or my best friend or my brother got 3%. Why? Well, that's when did he buy?
When did he lock in? That's the thing.
That's the biggest thing.
Even if closing, I mean, you could have a 5% closing this week and next week at 4%, but because the 4% was locked in 2 months before or something.
Exactly.
Closing was delayed.
It's all a timing thing. I had somebody that unfortunately they went under agreement and they weren't closing for, I think it was like 80 days or something like that. So we couldn't really lock in, and then things got a little bit worse. Now he was super cool. He's like, look, I've been watching the market. I know when we first started this, I was in the high 7s. We were in kind of the mid 6s, so it wasn't that big of a jump. And then we ended up just below 7. So it wasn't like it went up a ton, but it was still like, oh, I hated making that
pain.
phone call. Like, by the way, man.
And
Like,
explain that. So because it was an 80-day closing, that
80 day.
he said it was
Yeah.
like 80 days.
Yep.
So a typical closing from agreement of sale to the settlement table is 30 to 45 days.
yeah.
Why is 80 days a
Though
problem?
I can get it done in 3 weeks or less. So,
Plug it, Jimmy. Plug it.
yes.
So why is 80 days a problem as far as locking the rate?
Every company's going to be different with that, but we're at like a 60-day lock.
I think that's pretty typical.
Yeah, and the further out you are locking in, say I'm locking in at 60 rather than 45, 30, or 15 days, the pricing for that rate or the rate in general is going to be worse at
It's a
a
lot more
60-day lock
as you
than
go
it
longer.
is. Yeah.
The longer the lock, the more expensive it is.
Right.
Yes, correct.
Right.
Yeah.
Correct.
Yeah.
So it was one of those things, and we had conversations about this particular gentleman, and like, look, hopefully it gets better. Well, and it can also go the other way. He's like,
Yeah.
I realize that, and he was,
Yeah.
I mean, he was super cool about it.
Yeah,
And it,
I mean, it's
you
just
know,
one thing to be reasonable too. I
Yes.
mean, it's
Yes.
not like you're trying to take advantage of him or anything. It depends what the market does.
Yeah.
You're not Doctor Who. You can't go back in time.
Yeah.
you know what? I wish I could.
Same.
But yeah, it's just one of those things, and you know, for me personally, the way I do business is I don't, to put it bluntly, BS
Yeah.
people.
Stands for bullshit.
Yes, that's what it
You
stands
forgot to
for.
bleep yourself again.
But I tell them what we can offer, what's going to be best, and you know, there's going to be a company out there that will give you a better rate. It's always going to be out there, but then you're also, you know, are they hiding points in there, discount points?
Did they
know,
give
to
you a
pay to
fee
get your rate?
disclosure?
Yes.
Some of our friendly internet lenders that
Yes.
will not name. I've dealt with them before, and they're
Voldemort.
like, "Oh, you're getting this.
Voldemort.
You're getting this rate, and it's like super attractive." And I'm asking for a closing cost estimate, and they don't give it. And
Yes.
And there's a reason for that.
we get to closing, and there's an extra $3,000 in points.
Yes. That is something that, unfortunately, there are companies, they'll say whatever, you know, they're
Yep.
snake oil salesman, used car. I mean, whatever term you want to use for that, whatever it is to get the deal. And, you know, for me personally, that's just not how I do business. I want that person to have a good experience and not, you know, to get screwed
it's-
over.
And the best
biggest
rate
thing.
possible.
Yes,
You want them to have the
absolutely.
best rate possible,
Yep.
so it's as affordable as possible for them.
Correct.
The
Yep.
biggest thing too is keeping them informed, because
Yeah.
then they know what's going on.
Yep.
Like, hey, rates are. I always say they change like the price of gas. Like you
It's
can
true.
drive around town and it'll be 3 cents cheaper here, and the next day it'll be 2 cents more expensive there.
Yep.
Like that's
Never
how
understood that.
Yeah, I
how it
know,
is
I know.
with mortgage rates as
Yep.
well, and you know it fluctuates. And
Yep.
until you have a signed contract, you can't lock in.
And the loan estimate. That's the
Yes.
biggest thing when you get that loan estimate. And if you guys ever see the loan estimate and that doesn't say locked, that thing's still floating. And
Yep.
that could go up, down, left, right.
That's exactly what I was about to say.
Yep.
In layman's terms, what does that mean? So
You
Yeah.
ever met Layman?
with an 80-day
Which
close,
one?
if you can only lock at 60 days,
Yeah.
or you can only lock for 60 days, that extra 20 days, what happens then?
They could pay.
Yes, you have to
They
pay.
could pay
Is it
for it
daily,
for the
right?
extension.
Yeah.
We've all been down that road once or twice.
Yeah, yeah.
What I try to do when I'm locking a rate, you know, we have a whole list of investors, and investors are big giant mortgage companies that we lock in the interest rates with, and then they end up servicing the loan. What I will do is, you know, say I have somebody that's closing in 28 days. I'll look to see what the 30-day lock is, but then I'll also see what the 45-day is. And sometimes 30 and 45 are the same. And I'll lock it at 45 because what if something happens
Just
with
in
the
case,
appraisal?
yeah.
You know, what if we need something that,
What if the seller
you know,
needs more time?
Exactly. And it
Something
just
you
gives a
can't control.
buffer there to the buyer, so they're not putting extra money out of pocket.
Yeah.
My goal is to get the best rate with the least amount of money out of pocket, you know. And there's some people that are like, I want to buy points. I don't care what it costs.
Yes.
But I also go through like, you have to realize your return on investment.
Doesn't
You're
make
saving
sense.
$50 in your
Yes.
payment, but it's going to take you, 80 payments to make that up.
Right.
Rates drop, you're going to refinance in that time. It's
Right.
lost
Look
money.
at the camera. Tell the people that, Jimmy. I
Yeah.
feel
Yeah.
like they don't understand that.
You know,
Seriously.
You got to be careful with points.
Math.
It doesn't
Yeah.
always make sense. And if, the loan officer you're working with, if they're not, giving you that information, they're doing you a disservice, honestly. I mean,
Yeah.
that's the way it is.
And
I honestly just did a deal, and it was supposed to be in-house. It was supposed to be with Mark. And they got a quote from their friend who worked for a company that was in the Midwest somewhere. It was essentially an online lender. I knew the lending company, so I called her and I said, "Well, I don't really trust you." And they're offering a 5.5% interest rate. And this was 45 days ago, so we know it's impossible unless they spend $10,000 on points.
Yeah.
So
Yeah.
they say, "We don't care. We'll spend the money. We want the interest rate." Okay. So they bailed on the local lender, went to the internet lender, and then the girl quit the company.
Wow.
So the regional manager had to take over, and I had to find somebody local to handle it. And at the end of the day, they spent a ton of money on points, and they only went at 6.5. So internet lenders will tell you anything to get your business.
Yep.
And that's, we say it every time, all the time. Use your local lenders. James.
Internet lenders are like keyboard warriors. They'll tell you anything
Yep.
because they never have to face you.
There's that hyper local word again, guys. Hyper local. You need local people.
Yep. When I first got into the business, I was in quote unquote, I worked for a quote unquote internet lender, and
Don't say Rocket Mortgage.
oh heck no.
Oh, thank God.
No.
You got to bleep that one out.
Yeah.
I was trying to find my sensor.
But like you never see the people, you never have to face their realtor and things like that.
Yeah.
Like you're never going to work with those people again. Not that I took advantage of that ever, but it was one of those things where the pressure wasn't necessarily on.
You're not going to see them at the closing
Right.
table,
Yep.
Where I'm sitting in my office here in Lancaster County, if I'm not doing my best for the clients and for their buyer agent, they can walk right in and they
You're
can
gonna
shoo me
hear it.
out, or they can do whatever. Like it's
But that never happens to you because
absolutely not.
you always
No.
work in the best interest
Absolutely.
of
Definitely.
the consumer.
Definitely. And maybe I've lost deals over the years because I haven't gone
Well,
that
it's like,
route, but I can sleep at night knowing that I'm doing what's best
Exactly.
for
I
them.
would rather
Exactly.
lose a deal
I
than
would too.
Yep.
blow smoke up someone
Yeah,
to
that's-
make them
Mm-hmm.
go
I
with
feel like
me,
all
and
of
then
us
it'll be
seeing
a
here-
bad
Where are you
transaction.
blowing smoke?
All of us sitting here, that's what you're going to get. You're going to get real, raw, and honest.
I just lost a deal within the last few weeks where, I'd been working with them for a while. And like, I'm the type where my laptop comes with me everywhere. So if you call me and I'm out watching football on a Sunday, boom, I'm Mike seeing it. Laptop comes out, I do it, boom, send it off. And there was somebody else that quoted them a lower rate. Turns out what I was quoting them, they ended up getting a higher rate with
Yep.
that person. I'm like,
We talked
Blowing
about it yesterday,
smoke.
where
Give my hands.
you go out to a listing or a home that is going to be coming on the market. You tell them it's worth $400,000, and another agent comes out and
Yes.
says it's worth $460, and then they go with the $460. 3 months later, it sells for $400.
Or $375 because it
Yeah.
sat for so long because it was listed 60 grand over.
you get the low ball
And
offers.
then you get low ball offers and you
Trashy
get
offers.
Yeah, exactly.
Told you that story yesterday where I had a lead call for a
Yeah.
listing appointment. I went to it and I got the 10-cent tour, and I said, it's a nice house. I'll give you a quarter instead of a dime because I'm cheesy like that with dad jokes.
He's
And-
such a dad joker
Not a dad though.
without the dad part.
Yeah. So I'm sitting there, I'm talking to people, I'm like, so tell me what you think your house is worth. He said, well, that's how we call it you. I'm like, well, I happen to bring this stuff to kind of let you know where I think we're at. The house directly behind you, which is identical to your house, is under contract for like $360. Well, that doesn't have the yard. I'm like, the yard doesn't matter if it's not over an acre. Well, it's dirtier. So fine. I called the agent. Turns out they got a $340 cash offer on the house behind. So like they were kind of screwed. At this point,
So it wasn't even 360, it was 340.
no, I said, honestly, I think we'll be somewhere around $375. if you get yourself into a bidding war and you price it accordingly, you might get a little higher, but your appraisal is going to be the issue.
Because that's going to close before you're closing, and it's going to close low.
Yeah, and it's going to be right there. So they went with another realtor. People dye your hair if you're a realtor. Just don't look old. Stay relevant.
Michael, don't say that.
Well,
The wisdom that comes with that.
I had not seen her for a while, and last time, like, oh my God, what happened in like 5 years?
Can you bleep out and tell me who it is?
I'll tell you at the end.
Okay.
So anyways, I didn't get it. She got it, and she priced it wherever they told them to, right? Because they were thinking it's like some $400 and some $1,000
Yeah, but
house.
we're the
It wasn't.
professionals.
And it was on there for like over a month. And you
Yeah.
know where it closed, Jim?
$375.
Right where I told him. Right
Yeah.
where I
Yeah.
told him.
I love when that happens, though, to be honest. Which it's not often that I don't want a
when I don't
listing.
get the deal.
But when you know you're right and it closes exactly where you told
And
them it was going
proves
to,
that you're right.
yes.
That's the fun
Be
part.
honest. Be forthright.
Yes.
Do your service for your client.
Well, and our job is to say the hard things sometimes. Sometimes we have to tell you that your house smells like
Rock.
a dog.
Stone.
Sometimes we have to
Boulder.
say, you feel like it's worth $500,000. I'm so sorry, it's worth $460,000. Like that's our job. And if you don't have an agent that is telling you the hard truth, you need a better one.
Or just
And your house
what's
is gonna
the saying
sit.
about
enjoy the powder puff, I guess.
tell me
Yeah.
the lies, or
I don't know.
I don't know either.
That was good. That
But
was
you
good.
list
What a
a house at
metaphor.
460, maybe it gets competitive and they get 5 for it. It's like pricing it
Exactly.
appropriately
Yes.
is so much better than trying to shoot high and then
Yep.
you know.
Price
Such
it
an
at
important
5.
page in my
Yep.
listing presentation is
Yeah.
the cost of overpricing your home.
Yeah.
It's a lot. It really is. It's a lot.
And then, at the tail end of it, right, we're going to have the appraiser come through and
Sure.
they're going to assign a value to it. I mean, you can argue it, but odds are you're not going to win.
You never win against those appraisers.
I've one time.
Very rare. See?
them
One
market.
time.
One time in 8
live,
years.
Yep.
One of my best all-time ones.
Live.
I just had this conversation the other day. So we're going to price it here. It's a little below where I think it should be. We're going to let the market lift it up to where
Yep.
it needs to be.
And
Same
it
hand
depends.
motion.
It depends on what the seller's looking
You're
for.
welcome for those hand motions.
If the seller's got
was a
time
few
and they're
podcasts
living
ago.
there and they
I
don't
know
have a
as
place to go yet, maybe you do want to try it at market value.
You made fun
And
of
if
me.
it's a nice home that inspections won't mind, no big deal. There you go. If it's a little rough or has some glitches, quirks, price it a little lower and let people come in, and that's when you're going to get your waiving inspections,
Yep.
waiving mortgages, gets competitive, and people go a little crazy.
Price it low, watch it go.
Isn't that what
Yes.
Yes.
Randy says?
Yeah.
See? I'm not throwing names out there because I'll really get myself in trouble.
I don't price low. I try to price exactly where I feel like it should be priced. Sometimes, depending on condition, if there's smells or whatever, maybe we'll go a little bit low.
I always give a range and let the seller pick. And I try to give them a
Yeah.
here's what I think is going to happen if we're towards the
Yes.
top. Here's what's going to happen if we're towards the bottom.
Yes.
And you pick your experience that way as a seller.
Absolutely.
Absolutely. That is a great way to put it. You do. You pick
Yeah.
your
Do
experience.
you want,
If you're
like-
going to go at the top of the market.
Are you going to take that risky one? You're
Yeah.
going to take that risky FHA where they're throwing all the money at you?
Yeah.
Yeah.
Or you're going to take the solid conventional with 20% down?
Or a cash offer that's $6,000 lower in price.
But going to close in 2 weeks.
Yep.
James, what are you seeing mortgage-wise types? Like, what are you processing the most right now? Give us a breakdown, pie graph.
So
Pie chart.
yeah, generally speaking, most of the financing I do is conventional.
Is it?
Yeah, I mean that's crazy,
This
isn't it?
market,
It's
yeah.
crazy. But I will say that there has been an uptick in government financing, and
Yes.
I know it's easier with conventional, but government financing can be okay too.
They're fantastic loan
yes,
programs.
yes.
They just have a few extra steps.
Yes,
As long as
Are
the
you
appraiser
seeing-
doesn't get carried away.
Yeah.
correct.
Yeah.
Yes.
I mean, are you seeing like as many K-FITs as you as conventional? Which K-FIT is a government program on
yeah,
top.
it's
like
down payment assistance program through PHFA. Use that a lot. Oddly enough, I haven't done any of those in the last couple months, and that was
K-FIT?
kind of a lot of the loans
Yeah.
I was doing was first time home buyers. They don't have the money necessarily to put a lot into it, so it's a program. You get 5% of the purchase price to go towards down payment and closing costs.
Let's actually dive into that a little bit because I feel like
Let me get my goggles.
first-time home buyers need to know about this program.
Yeah. So Pennsylvania Housing Finance Agency, that's PHFA. A few years back, they came out with this program where it's, like I said, 5% of the purchase price.
5% of the purchase price that they give you.
To go towards down payment, closing costs. I mean, it takes a giant chunk
Yeah.
of the
You
out-of-pocket
preferential
costs
rates
out.
on that too.
So PHFA will set the rates for that. They are much slower to move up and down than the market. So that can be a good thing when we're in a rising rate environment. It can go the other way when things start to fall.
Sure.
Me, ABC lender, anybody else, we don't have any control over that. It's all set by PHFA. But it's one of those things where it's like it can be free money at the end of the day because it's forgivable by 10% per year you're in the home. You're in that home 10 years, it's like a grant.
Yeah.
You don't pay any of it back. You're in the home for 5 years, you're paying half of it back when you sell. It's to get you into the home because it's, times are tough and not everybody has the nest egg to
Here's
put out.
another prep. If you use an internet lender, they don't know about the Pennsylvania housing.
They can't even do it.
Exactly. They don't even know what it is.
Yeah.
They can't even do them.
So what would that look like for an average consumer? Say closing costs, including down payment, are $25,000. And then they do the PHFA grant.
So, on a 250, let me do the math. What would that be? 12.5 they could get in assistance.
So $12,500 would directly come off of those closing costs for you as the consumer, just because you have a lender who knows about this program.
Yep.
And in 10 years, it's gone.
In 10 years, it's gone. Now, if you sell in 5 years, you still have to pay a portion of it back, but it's only half of it.
Yeah. I mean, it's one of those things where, obviously the equity in homes went through the roof for a long time, and we're stabilizing a little bit, which is a good thing because it was pricing a lot of people out. We couldn't stay on that trajectory forever. But, as you're gaining equity in the home, paying down that principal, I mean, it's not like you're going to be going in your pocket to pay that out. Like it'll go out of your proceeds. So I have a lot of people that are doing it. You can still refinance, if rates go lower. So it's
And a
not
lot
like
of lenders are offering rebates on refinancing, correct?
Yeah, depending on, we'll put out a something every couple of months, like, hey, you go under agreement by this time, then we're doing a credit of X amount towards refinance. So that's something, just an incentive to, because a lot of people sat on the sidelines for a while.
They're stuck in the damn market.
And it's
DAM, no N.
You know what? You're not the only one that's sitting on the sidelines.
Yeah.
There's a lot of other people, and that's just going to, when rates
Eventually
drop, people are going to flood the market.
And here they come back, and then it's going to be
Rates are going to go down and prices are going to go up.
And
also-
Lifting.
I mean,
Another thing that it just came to mind talking about this is we've seen a huge price appreciation over the last few years. So if you have an investment property that you've been sitting on for a while and you're thinking if now's the good time to sell or not, now's the perfect time because you've just gained 10, 12% a year in equity.
Which is not typical.
And the next few years, it's gonna take you 4 years to gain another 10%.
Yeah.
So you've made a killing on that, on the appreciation. Now's the time to cash it in and take that elsewhere.
Capitalize on it. Do a
If you're thinking
1031
about it.
exchange.
Yes.
Buy another one.
bite the
Yes.
bullet now.
Yeah.
If you're going to buy now, because if you're just going to wait, you're just going to regret it.
I mean,
That's
honestly,
if you're banking on appreciation.
yes.
If it's still cash flowing positively and you want to
Keep
continue
it.
that,
Hold
keep
it.
it. It's real estate's the best investment. But
Yeah.
with how home prices have increased over the years, you think back a couple years ago, if somebody sat on the sidelines until, say rates today dropped to 5%. Well, now you're paying extra for that home just because you didn't want the higher rate.
Yeah.
Is it a wash? Are you making out better? Are you making out worse?
not coming out
Probably
ahead.
not coming out ahead.
You're not coming out ahead, and you're having to compete. And if you have one of these government-backed programs that we're talking about,
You're
VA,
lowering
FHA,
the
USDA,
competition.
PHFA, you're lower because sellers will pick the conventional or the cash. because it's easier.
Yep. And with PHFA, you know, the K-Fit or K-Flex, because K-Fit has a household income limit to component to it. So if you're over the limit, make too much money, unfortunately, that program doesn't work. But there's another one that, you know, it'll have a higher interest rate, but you can still tap into that assistance. And that was, you know, those were tough conversations and like, wait, I make too much money.
I know.
Unfortunately, you do.
Yeah.
But they came out, it was probably a year and a half later where they're like, we're doing this other program that we can help people that are making money, but they just don't have money saved up. So
That's a nice alternative.
It
Yeah.
is because
Yep.
the cost of living has gone up tremendously. And even if you make more than, you know, that
Yeah.
K-Fit limit, you know, it's,
The income has
you
not
still need it.
increased as much to cover the cost of living.
Correct.
And
Correct.
there's a program, first-time homebuyer program with PHFA that doesn't have a down payment assistance attachment to it. That has a rate that is lower than regular market rates with conventional, the Keystone Home Loan. So that have used that quite a bit.
And that's a
you know.
conventional appraisal.
Yep, you can do conventional. So like K-Fit, Keystone Home Loan, K-Flex, all those programs, you know, you're still going to have either conventional or FHA or
Yes.
USDA with it. But, you know, the Keystone Home Loan, sometimes it's, you know, 3/8, 0.5% lower than what a typical conventional rate, for instance, would be.
Wow, that's awesome.
That is.
It, you know, they still have to be within the income limits for that. It you know, that's part of it. But it's like when I see that and they're under the limits, I'm like, you know, let's go
Golden,
this
like,
route.
you need
know?
this.
Lock it in, baby. Lock it now.
Yeah.
Yep.
Yeah.
You know, one thing that is kind of nice for us at Home Sale Mortgage that I know not every company, or I don't know of any other companies that do this. We have with first-time home buyers conventional financing. If they're under the area median income, there's, you know, with rates, there's different things that go into them. You know, your credit score bucket, first-time home buyer, your loan to values, how much you're putting down. If they're under the area median income, there's a part of that, you know, goes into the rate, comes out. So the rate's actually lower. So when you're comparing two different companies and maybe a non-first-time home buyer, we're the same. But a first-time home buyer, we might be lower in that aspect. So that's something that I want to say it was like a year and a half ago, we kind of took that component out of it. And
That's
our
awesome.
first-time home buyer rates were good. I mean,
Yeah.
they're much better than some of the things I've been seeing. So
And I feel like we've seen for several years now, it has been the hardest for first-time home buyers
yes.
to get into a home.
To get your foot in the door, you got to have so much saved up.
You have to
And
have so much saved up. That's so hard to do when you're
I was
young.
just talking about Jen Doobie, how you're talking with her about how, you know, 2010, 2011.
Executive Vice President of Operations at Berkshire Hathaway Home Sale Services.
It was
Not to drop names or anything.
so much fun working with buyers because
Yeah.
they show up and they have $5 or $10 grand saved up, and we put a
No
$1,000
problem.
deposit. We get full seller's assist. We
Yep.
can get, you know, list price, sellers happy. Now I'm talking to people and they're like, "Oh yeah, I've got like 25,000 saved up," and it's like, "Yeah, keep working on that."
I know. It's terrible.
It's
that
tough.
even that just
It's
wasn't
tough.
just 2011. That was 2017.
Yeah.
You know, when I got into the market, it was still a very balanced market.
What are you guys seeing as far as seller assist? Because I'm getting some deals that do have some seller assist attached to it. So
It's been a year
Yeah.
for me.
I just had one that had
Since I've had
5,000 sellers assessed.
I
Currently
have
under contract.
buyers right now that need $10,000 in seller's assist,
can be tough.
and it is tough.
Ooh, 10K. That's
We wrote on one of your listings, remember?
Oh yeah.
Oak Street, I think it was. Yeah, but it's.
I've got one coming
Do you?
in Denver.
Are they willing to give $10,000 seller's assist?
Well, no, but it'll be affordable.
Burn out. Come on. Why are you telling me?
but also with, you know,
There is one sitting in Denver, though. Did you see that one on Locust
Well, they're all
Street?
kind of sitting there, aren't they? They're not.
Yeah.
They're on the move.
Yeah.
one
Not
thing
migratory houses.
Well, that's what I've told them. Like, we need to wait a couple weeks. They need to be sitting for a couple weeks before
And
we.
there's a couple sitting in Aphrodite, too.
Yeah.
I had that conversation once or twice so far this year. Hey,
Yeah.
you know, I see this has been on the market for 3 hours, but you need $9,000 in sellers.
Right.
assist.
And what seller's
And you have to
assist
sell a
is,
house or something.
And
What
you have to
seller's
sell
assist
4
is-
mules and 80 acres.
what seller's assist is
Yeah, this is something that
actually for the buyers. So it is the seller. So I have buyers right now that need $10,000 toward their closing costs so that they can purchase the home. That
From the
used to
seller.
be from the seller. Yes. That used to be pretty typical. You're going to get seller's assist. When we would go in on a listing appointment, we would say, hey, we're going to prepare. This is what 3% seller's assist would look like. This is what 6% seller's assist would look like. The market has not been like that in many years. So
Lack of inventory is
yes.
a direct cause of that.
Yes. Yeah.
Now, one thing is, say, maybe you have a buyer that doesn't need seller's assist, but they're like, man, this rate, like it really makes things tight for me. Maybe they're well qualified at the rate, but everybody has their personal budget. One of the first questions I ask is, where do you want to be payment wise? Because it doesn't matter if you can afford $1 million home
Nope.
if you want a $200,000
Payment. Yes.
One thing that I've had a few people do, which they had to get essentially seller's assist for this, is a 2-1 buy down.
Yes, I've done that.
Yep. So, the first year, all it is essentially where the market rate is, take 2% off for the first year, 1% for the second year, and then it goes back up to where it was
1% of their interest rate.
Interest rate, correct. And all the seller has to do is contribute the difference between those payments. So if it's, $8,000 difference, we'll say, they kick back that $8,000, then the first year their payment's much lower and it goes up, and you can refinance.
and then they refinance
Yes.
at the end of the 2 years.
Yeah,
Yes.
or say rates, drop big time, and it's like kind of in between the, where it would be after the first year and the second year. Say we're 9 months in, but the rate drops down, and they can refinance at that point. They're not held to that where they have to go up to that top end rate. So I've had a few people that have done that, and I have one that's about to go up by 1%. They've wanted to refinance, but where they wanted to be, it just hasn't happened.
Yeah.
So we've been kind of waiting, and for me, I'm looking at these rates every day because I get paid the same whether it's a purchase or refinance. 4 of us here are commission, so
We're commission-based.
I have a whole list of people I want to refinance that
Yeah.
I'm just waiting for
You're
rates to
waiting
get
for
better
it to
on.
make sense for
Yes.
them, for you to be able to refinance
Yeah.
them.
We have to be able to justify a refinance.
Exactly.
You can't just refinance. I tell this story all the time. My parents came to me. They're like, we want to refinance. I'm like, well, why? Well, our rate's this, and they bought a while ago, so their rate is really good. And it was only going to be a small decrease in their rate. I'm like, no.
Yeah.
It doesn't make sense. Or you're giving up a deal. I'm like, it doesn't matter. Like, this is what I would do with anybody. No, it doesn't make sense. Yes, your family, but this other person, I'm not going to do that because I want them to be happy. I want them to see
Exactly.
the benefits of the refinance, and then they'll tell their friend, hey,
Exactly.
James took
Don't
care
rush
of
the
them.
refi.
Yeah.
Yep. Yeah.
Because you do start over the amortization. And if you look at the interest paid in the first year after a refi
Oh.
and the first year as a purchase, and if you keep refinancing, you're not getting
Yeah.
ahead very fast.
You're not
Taking
getting
a
ahead
long
You're gonna be
fast.
time.
behind very quickly.
It really needs to make a lot of sense. I always heard it's
Consult
at
with
least
your mortgage lender. Consult with
Yes.
your realtor.
Yes.
Yes.
1%.
I always,
Yeah,
that's
more
what I was about
really.
to say. I always heard it's at least 1%.
Yep.
If your rate is currently
used to be 2.
7,
1%, you're but also factor in.
Depends where you're at in your amortization. If you're 10 years in, even 1%, 2% might not make it worthwhile because
But then you can, like me personally, when I purchased my home, I don't know why the loan officer I started with, Mark, he ended up, leaving the company that he was at to go to another company mid transaction.
Which company was that, Jim? Was it?
we're
That he-
not
Was that
name
an
We're not-
dropping.
acronym, or is it somebody who?
Well,
might-
both were acronyms.
We're not name
Yeah.
dropping. Anyway, go ahead.
But
Is it the Voldemort of the mortgage world? Or his initials the same as an extraterrestrial?
yes,
Okay.
yes, that's where he went. But
E.T.?
that's where he went.
Yeah.
From where he
not his name.
he was when I started. But for some reason, we went FHA back then. And I've had my house for 11 years.
The rate was
And,
probably better.
Probably. But
And you
I
could get more seller's assist,
Debt to
FHA.
income.
got it. And Jen Doobie was my
Yeah.
my realtor for that.
Yeah.
So
Wow, what a ride that must have been.
yeah, I was the easiest client she's ever had. We saw the house once, one house, one time, offer in, got it. That was it.
Wow.
So, you know, my rate was good, but I refinanced from, and because I got a ridiculous deal on my home, ton of equity, all that. I had enough that when I refinanced, I only dropped 1/8 of a point in my rate, but I got rid of my mortgage insurance by going to conventional over FHA.
And did you do a cash out refi?
Nope, just did a
you
straight
kept it- okay.
rate term refi. And I went from, so I was putting extra money towards my principal balance every month. And it actually turned out that it was less than $100 more to go from a 30-year to a 15-year mortgage.
There you
Saved
go.
1/8 of a point, got rid of the mortgage insurance,
Yeah.
and
Wow.
it just made
That just
a
makes
ton
sense.
of sense.
Yeah.
Yep.
So it depends on your situation, is what we're saying. You
Yeah.
know, you really need to talk to your lender, talk to your realtor.
The
before
home
you
value is
decide.
going up, especially somebody that's putting less than 20% down.
Yeah.
You know, that can wipe out the mortgage insurance. It can cut a big chunk out if maybe credit scores weren't so great when you purchased. But now you're, mid 700s, high 700s. That mortgage insurance, especially for conventional financing, a lot of that is based on your credit score.
Yeah.
So if your credit score gets better, home value goes up, you could really subtract a lot of money per month off of your
Fun little factor there,
payment.
James.
Yeah, absolutely. I have one or two every now and again.
He's a plethora of knowledge.
Yeah.
All right, guys. Got anything else? I think we're going to wrap this one up.
Yeah, I feel like we got
Forgot-
a lot of good content there.
51 minutes of Jim talking.
Wow.
Nice.
All right.
Sorry.
As on Hot Ones, this camera, this camera, this camera. James, tell them what you got going on. Tell them how to reach you.
I don't know. Do you want my phone number or email? I don't
Well,
know.
that's up to you. I mean, we blast our stuff everywhere.
I'm on the
so,
Facebook, James Ream.
We'll drop his
Yeah,
info
you can drop
on
the
the,
info
on the
in there.
YouTube. Yeah.
But yeah. closing
Thank you,
loans,
Jim.
so.
Everybody have a good Thanksgiving. Good Thanksgiving Eve. And we'll
That's
catch you
it.
next-
We're
that's
good.
it.
Awesome.
All right.
Keep clapping.
Yay.